Welcome to Dubai Daily, your essential morning briefing on Dubai's real estate market. This podcast is brought to you by Parag Kundalwal, founder and CEO of Consulta, a Dubai-based real estate consulting and global capital advisory firm.
It's Tuesday, December 23rd, and this is episode 42. 2025 Market Patterns, Investment Lessons from Real Data. Yesterday, we looked at the holiday week dynamics. Today, we're digging into the hard numbers from 2025.
Exactly. We're using verified data from the Dubai Land Department, DXB Interact, Property Monitor, and Asteco. No theoretical case studies today. We're examining actual market performance, transaction statistics, and the patterns that really succeeded or failed in 2025. Providing actionable insights for your 2026 decisions.
Let's start with the big picture. H1 2025 market performance. The numbers were exceptional. The Dubai Land Department recorded 125,538 transactions, totaling a massive AED 431 billion.
That's a 26% year-over-year increase in volume and a 25% increase in value. It shows sustained momentum and confirms continued market strength, even with those persistent concerns about oversupply.
And off-plan transactions completely dominated, accounting for over 70% of all property sales in the first half. That level of activity really reflects buyer confidence in Dubai's developers and their attractive payment plans.
But the ready market wasn't quiet either. Ready property transactions saw a 40% surge in value during Q2, hitting AED 71.7 billion. This indicates healthy liquidity and strong interest in properties for immediate occupancy.
Let's talk about prices. The average property price in Q2 2025 climbed to AED 2.98 million, a 15.3% increase over the prior 2 years. The price per square foot hit AED 1,823.
And the standout performer? Villas. Q1 2025 villa sales reached AED 41.3 billion. That's a 43.1% increase compared to Q1 of the previous year. This really brings us to our first successful investment pattern: villa appreciation leadership.
This was the most significant success story of 2025, continuing the trend from 2024. Property Monitor and Asteco data confirms villa prices increased 26% during 2024, with that momentum carrying right through. Prime communities like Arabian Ranches and Dubai Hills Estate saw immense appreciation.
It all comes down to a fundamental supply-demand imbalance. Dubai needs nearly 29,000 new villas by 2025 just to meet current demand. The supply pipeline simply can't keep up, creating this persistent upward pressure on prices.
So, investors who purchased 3 to 4 bedroom villas in established, family-oriented communities early in 2025 did extremely well. They secured rental yields of 5 to 7% plus annual appreciation of 8 to 10%. Delivering total returns exceeding 13% in many cases.
But a key caveat here: not all villas performed equally. Location within established communities with proven infrastructure was critical. Investors who prioritized community reputation over the lowest price achieved far superior outcomes.
Moving to our second successful pattern: off-plan payment plan leverage. With over 70% of the market share, this strategy clearly works when executed properly. It allows investors to control assets with a small down payment, amplifying returns when the property appreciates during construction.
A perfect example is Dubai Creek Harbour. Properties bought at initial launch prices in early 2025 saw capital gains of 18 to 25% by handover. The location and EMA's track record drove that confidence.
But, and this is a big but, success required developer quality. Projects from weaker developers experienced crippling 6 to 18-month delays. This highlights that developer selection and community fundamentals proved more important than the payment plan terms alone.
Let's not forget our third success pattern: rental yield stability. Despite oversupply concerns, yields across Dubai were remarkably stable, ranging from 6 to 11.2%. Mid-market areas like Jumeirah Village Circle continued to be champions for competitive yields.
In JVC, one-bedroom apartments consistently achieved 7 to 8% gross yields with strong tenant demand. This stability provided predictable cash flow for investors, creating an income cushion that protected them during any market adjustments.
Absolutely. But it wasn't all good news. We have to look at the challenging segments. The first one? Oversupplied mid-market areas. Certain clusters in Arabian and parts of JVC faced rental pressure and minimal appreciation, with some showing early signs of 10 to 15% price corrections.
The lesson there is the critical importance of supply analysis. The second challenging segment was infrastructure-distant properties. While they offered lower entry prices, the lack of metro access or good road networks limited appreciation and created rental challenges.
Data consistently shows that metro proximity adds a 10 to 15% value premium. Investors who prioritized a low absolute price over connectivity faced real liquidity challenges when they tried to sell.
So let's synthesize the key lessons from 2025. First, the villa shortage created exceptional opportunities. Second, off-plan leverage works, but only when paired with a quality developer. Third, stable rental yields provide crucial portfolio ballast.
And finally, timing matters. Q1 purchases consistently outperformed later periods by 3 to 5 percentage points. It seems that preparing during Q4 for decisive Q1 execution is a winning strategy.
So, looking forward to 2026, these patterns suggest moderate growth is likely, maybe 5 to 8% annually. The 42,000 new units delivered in 2025 will certainly impact pricing, especially in the mid-market.
The mantra becomes quality over quantity. Properties in established communities with proven infrastructure will outperform, and the villa shortage will persist, meaning well-located family villas should continue to appreciate.
Several principles were verified by 2025's data. Developer reputation is critical. Total cost analysis, including service charges, is essential. Infrastructure proximity adds a consistent value premium, and having adequate cash reserves prevents distress sales.
So, to conclude, today's data-driven analysis of 2025 provides a clear roadmap. The market showed incredible strength, but success was not universal. It was found in specific patterns: villa appreciation, smart off-plan leverage, stable rental yields, luxury segment resilience, and decisive Q1 timing.
Understanding these patterns, both the successes and the challenges, is the key to making informed, strategic decisions in the year ahead.
For expert guidance on navigating the Dubai real estate market, you can contact Parag Kundalwal at Consulta. Search for Parag Kundalwal on LinkedIn, visit the website at consultadxb.com, or email parag@consultadxb.com. You can also call on +971 58 596 4631. Dubai Daily is here for you every Monday to Friday.